Hello everyone, and welcome back to the Velocity channel, where this is your bridge to financial freedom. So today we're going to be tackling a real life problem, and it's a real problem for a lot of people, and that is, how do you pay your bills? How do you keep your house, keep your car, keep those debt collectors from getting on you if you have negative cash flow? We're going to tackle that and more on this episode, but before we get into that, like, share, and subscribe so that everyone around the world can know the power of velocity banking. Now, I know that there are times where we really don't know how to pay the credit card bills, how to pay these different loans. But the time has come now to kind of shift your thinking, perhaps give you another perspective on how to look at the money that is coming in and on how you are spending it or investing it, or better word would be allocating it. All right. So here we actually have a scenario where this individual, it has negative cash flow, flowing negatively every month. But what if I told you that what you think is a negative cash flow, what if I told you it could be a positive instead? Let me show you what I mean. First of all, let's go ahead and give you an overview of what's going on. This individual does have credit cards, all right? They also have loans, but I wanted to focus on just this part because I want to show you what happens when we shift your thinking from traditional banking to velocity banking. You start thinking a whole different elevated way. $18,246 at 16.25%. And the minimum monthly payment on that, $429.55 per month. $9,369 at 9.9%. The total monthly minimum payment on that is $171 per month. $5,896 at 16.9%. $142. Listen to this, $2,136 at 24.5%. $65 per month, and $3,652 at 22.5% at $105 per month. Now, look at the cash flow, folks. First of all, let's look at the negative cash flow. It's $1,029.30. Now, at this point in time, some of you are like, he needs or she needs a consolidation loan. They need to wave the white flag and say, no, 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 we're not paying that. We can't pay it, right? And listen, this person has a mortgage, but we want to show you how to keep your house and keep your car even with negative cash flow, all right? Now, some of you probably have already known what the problem is. And many times when you know what the problem is, the solution is in the problem. So listen to what I'm talking about. They have a $1,442 per month mortgage, all right? Expenses, $1,062. Pause for effect. $1,725 of overall debts, okay? They're bringing in about $3,200 each and every month. How are they going to stay in the house? How are they going to stay off of the debt collectors' backs, okay? From those debt collectors calling them. What if I told you that they were using their credit cards all wrong? And that's actually why they are cash flowing the negative $1,029.30. What they're doing is they are segregating their income. Do you remember that term? It's a real term, folks. And many times segregation is bad, okay? But in the term of debt, listen, it's really bad because we're looking at our income like the bank told us to. And that leaves us with negative $1,029.30. So now watch this. What if this person could take the expenses and instead of having it segregated from their debts, what if I did this? What if I erased the line of segregation? What if I erased it and said, now The expenses are part of the debt. Now, what we can do is we can pay each and every one of our minimum payments, okay? And also, when we're doing that, within the grace period, okay, within the grace period, how much of the minimum monthly payments can we use? 100% of the minimum monthly payments can be used if you're paying within the grace period. Now, because they have the $1,062, all right, and this is only $912 thereabouts and 55 cents, okay, they can actually add on top of this one, right, because this is the cash flow sucking credit card right here, an extra $100 or so, all right? Now, because they are in this situation, right, it's going to be a little better, but we're not going to be focused on paying it off until we have more cash flow that we can utilize. Now, as we look at this, and as we are putting our $1,062 inside of our credit cards, what happens to the expenses now? It's in our control. Because every one of the expenses we can pay with a credit card. So let's go ahead and park that $1,062 inside of these credit cards, all right? Now, which loan or which credit card do you want to spend the most on, all right? We have the minimum monthly payment. The biggest minimum monthly payment we have is this one. But what you're going to utilize is the cash flow indicator, all right? The one that is the least efficient is the one you want to spend the most of that $1,062 on, all right? And remember, you're going to pay the minimum monthly payments, but what is the extra? Where is that extra going? Put it through this formula to find out, okay? Cash flow indicator equals your line balance, in this case, divided by the minimum monthly payment. Now for me, I went ahead and tackled this one. So that's where the overage of the $1,062 is going to be going. But remember, and you've got to remember this, that if you're paying within the grace period, thank God for grace, right? Isn't grace important? Look at the grace, right? Within that 21 to like 25 day grace period, you can use 100% of these minimum monthly payments, which means what? You can pay your expenses again from your credit cards. Do you see how important it is that we stop segregating many times? Okay, not saying that's the case all the time, but have to look at your numbers like we're looking at this person's numbers. We're almost finished with crafting them a roadmap on out of all of their debt, okay? But this one right here, we want you to know it's going to be very strategic, all right? And that $1,442, guess what? Now they can pay it, all right? Why? Because that $1,062 is now within their cards, okay? It's not a separate expense anymore. So go ahead and amalgamate those, all right? So that's what happens. Now, what happens if we are eligible for another line of credit? There's someone that said, well, CJ, can't we transfer the balance to a lower interest rate? Absolutely, you can do that as well. If you are approved with a line of credit, you can do a metamorphosis of interest. You can metamorph interest. There you go. It's called metamorph interest. That's what you can do. You can make sure that all the balances here go towards that line of credit, especially if it's a lower interest rate, which is going to free up your cash flow tremendously. So let me go ahead and get out of the way so that you can look at this. Remember, this cash flow of negative $1,029.30 perhaps it is not what you're thinking. Perhaps we need to move our finances in a way that will free up the money to us. And remember the 21 to 25 days, okay? Remember that. Just make sure that you're within that 21 to 25 days. Look at the terms and conditions, because the large print giveth, but the small print taketh away, right? 21 to 25 days. So when you're within that, you don't have to worry about, the principal and the interest split. You do have to be concerned about simply making sure you're within that grace period so you can use 100% of what you see here to pay off your expenses. All right, folks, the more cash flow you have, the faster you're going to pay down these debts. So get to working on that right away. Make sure that cash flow is something that is a priority in your life and not just something that is secondary. All right. Now, the cash flow, how do you actually calculate that? How do you calculate the velocity term? Okay, well, let's just go ahead and take a look here. We have, for easy math, our favorite number, 10,000. All right. And let's just say you got a cash flow of 2,000. What does that mean? Well, if your cash flow is 2,000, meaning $2,000 is resting within your credit line, then you're going to be paying this off in, you see what I mean by the solution is in the problem, 10 over 2, which is 5. 5 months, and you will be out of that line of credit. But if you are in a negative cash flow situation, it's most likely because you're not allocating correctly your expenses. Now, make sure that those expenses can be paid by that line of credit, can be paid by that credit card, and oh, by the way, it can, all right? Even if you are negative $1,029, right, in the hole, that's okay. It's not like you're going to be there forever. So you can keep using, right, this, especially if you, can't work or something that you maybe don't want to work yet. You're not ready to go back to work yet. Maybe there's some slow times within your business. You can use this method to pay off those bills. All right. So continue to use this. Also, make sure that you are taking advantage of our classes, folks. Listen, we also have a webinar on the Money Max account so that you can know where your finance is going, perhaps see something within your checking account or your savings account or even your retirement account that can propel you out of situations like this, increase your cash flow by $500, $600, $700 simply because we have a machine, a software working for you instead of against you like some of the banking algorithms. Listen, we signed the dotted line, so I am not shifting responsibility to the bank, right? It's our job to get ourselves out of what we have. And folks, when you have the grace period, when you have a grace period like this, all right, 21 to 25 days, when you pay it, you can use 100% of this money, all right? So folks, please let me know what you think. Let me know what your issues are, your challenges are with Velocity Banking. We have a form. We do a free analysis for everybody. I'd love to see what you think. And you know what? Since we're at the end of the video, I want to share with you this. Just like there's a grace period, right now, we are in a grace period. And just like with the grace period, it's all good. Money on the wood, it's all good. But money out of sight causes fights, right? And so since we're in the grace period, we can use 100% of this, right? And everything's okay. But we're in a grace period right now in the world where if we don't take advantage of the grace of God and give our lives to Jesus Christ, it's going to be way worse than negative $1,029.30. So take advantage of grace, take advantage of the grace period, pay off all of your debts. God bless you, and we'll see you soon.